You know, India has one of the most ambitious energy goals on the entire planet. We're talking about a green transition of truly epic proportions. But to build a future like that, you need more than just solar panels and wind turbines. You need a seriously powerful financial engine to make it all happen. So today, let's take a look at the financial engine trying to turn this colossal green dream into a reality. First up, let's just try to wrap our heads around the sheer scale we're talking about. This isn't some small side project. This is a complete reimagining of how a nation of over 1 billion people gets its power. I mean, just look at this. That's not just a field of solar panels. It's a literal sea of them, stretching way out to the horizon. This picture really captures the massive scale of India's ambition. We are talking about projects that can power entire cities all on their own. And here is the magic number you need to remember: 500 gigawatts. That's the target. That's what India wants its renewable energy capacity to be by 2030. Now, to put that into perspective for you, that's more than the entire current power capacity of Germany and the UK combined. It's a huge number. And look, this isn't just some far-off dream on a piece of paper. India is making incredible progress. The country has already installed 237 gigawatts. In fact, half of its total power capacity now comes from non-fossil fuel sources, and they smashed that target a full 5 years ahead of schedule. Okay, but let's be real for a second. Building all of this green infrastructure costs an insane amount of money. Ambition is one thing, but who is actually going to fund this massive multi-trillion rupee transition? Where's the money coming from? Well, a huge part of the answer is an organization called IREDA. They are the financial powerhouse right at the heart of India's green energy mission. So what is IREDA exactly? Well, it's a government-owned company with this really prestigious Navratna status, which basically means it has a ton of financial freedom to make big moves. And here's the kicker. It's India's largest financial company that deals only in green financing. It's a pure-play company, meaning its entire business, its whole reason for being, is to fund this clean energy revolution. And you know, these guys aren't new to the game. IREDA was set up way back in 1987 and has been steadily growing ever since. But just look at what's happened in the last few years. It's been an absolute whirlwind. A massive stock market debut in 2023, that big upgrade to Navratna status in 2024, and now they're even setting up shop in Gift City to fund the next wave of tech, like green hydrogen. They are moving fast. And when you look at where their money is going, you can see they're not just a one-trick pony. Sure, solar is the biggest piece of the pie at 24%, which makes sense, right? The costs have come way down. But look at how diversified they are. They're funding wind, hydro, and a huge 33% chunk in other. Now that's where things get interesting. That's where the future's really taking shape. They're funding everything from ethanol plants to the very factories that will build the next generation of green tech. Okay, so that's the what they do. But what about the how well? How are they actually performing? Let's dig into the hard numbers. Wow. I mean, if you want proof of the surging demand for green financing, just look at their loan book. It jumped by 26% in just 1 year. And that isn't just a number on a chart. That's a direct reflection of how many new solar farms, wind projects, and green factories are actually getting built. And here's the really crucial part. All this massive growth is actually profitable. Their operating profit shot up by nearly 50% year on year. For a state-run company, this is absolutely key. It means IREDA can take its own earnings and pump them back into funding even more green projects without having to rely solely on the government for cash. But, and this is a big but, here's where we get a major dose of reality. As successful as IREDA is, the total amount of money needed to hit India's 2030 target is a staggering 30 lakh crore rupees. That's about 360 billion US dollars. It's a number that's almost hard to comprehend, and it's way too big for any single company, even IREDA, to handle on its own. Right, so that huge funding gap, it brings us to the bigger picture, because IREDA's success is just one piece of a much, much more complex system. And that system is facing some serious roadblocks. Because it turns out, having the money is only half the battle. As IREDA's own leadership points out, there are major hurdles on the ground. First, you need better transmission lines. Think of them as energy highways to carry all this green power. Then, you've got to make it easier and faster to acquire land for these huge projects. And this is a big one. You absolutely have to fix the finances of the state-level power companies, the discoms, because they're the ones who ultimately have to buy this electricity. Finally, you need to enforce something called RPOs, or Renewable Purchase Obligations. That's basically a rule that forces these discoms to buy a certain amount of green power. Without fixing all these things, all that money has nowhere to go. And you don't have to take my word for it. The chairman of IREDA himself, Pradeep Kumar Das, summed it up perfectly. He says it's about policy, financing, and systemic reforms. Think of it like a three-legged stool. If one of those legs is weak, the whole mission could just fall right over. All right, let's switch gears for a minute. We've been talking about this huge national-level mission. Now let's zoom all the way down to the personal experience of just one investor. Because behind all these big numbers and policies, there are real people putting their own money on the line. And man, what a roller coaster ride it has been for them. After a spectacular debut, the stock just took off, soaring all the way to a high of 310 rupees. But then it saw a really sharp correction, falling all the way back down to 137. This kind of wild swing just shows you the high-risk, high-reward nature of investing in a sector that's going through such massive change. So to put a face to these numbers, let's talk about an investor. We'll call him Pramod. He got excited, he bought in at 235 rupees a share, pretty close to the peak. And now he's sitting on a pretty substantial loss, at least on paper. His story is one that a lot of retail investors can probably relate to. They bought into the hype, and now they're left wondering, okay, what do I do now? So, what are the experts telling guys like Pramod? Well, the advice is pretty pragmatic. The general idea is to hold on for the long-term potential, but if the stock bounces back up to around the 183 rupee level, maybe use that as a chance to sell some shares and manage your risk. It's a strategy to protect yourself from more potential losses while still keeping some skin in the game for the future. And that really brings us to the big question at the end of all this. IREDA is, without a doubt, central to India's green ambitions. But does that automatically make it a winning stock for investors like Pramod? Or is all this volatility in the market really a reflection of those huge systemic challenges we were just talking about? The answer to that question, well, it's not just going to define a few investment portfolios. It could very well define the future of energy for an entire nation.